leave me here high and dry. Oh, but I don't wanna jinx it, baby. Let's not get ahead of my time. Oh, but I don't wanna miss you, baby. So I stand up and speak just my mind. Oh. You're chilling wind and rain. You're some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry. Baby, you give me ice and fire. You're channeling wind and rain. You're some kind of butterfly. Don't leave me here high and dry. Oh, 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 baby, you give me ice and fire. You're giving me wind and rain. You're some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry. Oh, well, I don't wanna jinx it, baby. Don't leave me here high and dry. Oh, but I don't wanna jinx it, baby. Let's not get ahead of my time. Oh, but I don't wanna miss you, baby. So I stand up and speak just my mind. Oh. give me midnight. You whip up my appetite. Don't leave me here high and dry. Baby, you give me ice and fire. You're channeling wind and rain. You're some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry. Oh, 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 baby, you give me ice and fire. You're giving me wind and rain. You're some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry. Oh, well, I don't wanna jinx it, baby. Can't twist myself at the spine. Don't wanna overthink it, baby. It's just twist your body and mine. Baby, you give me ice and fire. You're giving me wind and rain. You're some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry. Oh, but I don't wanna jinx it, baby. Let's not get ahead of my time. Oh, but I don't wanna miss you, baby. So I stand up and speak my mind. Oh, baby, you give me ice and fire. You're channeling wind and rain. You're some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry. Baby, you give me ice and fire. You're channeling wind and rain. You're some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry. Oh, wind and rain. You're some kind of butterfly. Baby, you.
Well, hello there, everyone. And how are you all doing this Thursday, the 11th? The big news for today is what? The markets are pumping overall. We're talking stock markets. We're talking crypto markets. We're talking all sorts of juicy action. Now, real quick, the reason the markets are moving, it's pretty simple. Between Trump and Harris, things were crazy separate, right? So businesses, people, investors out there were like, yo, this is pretty whack. We need to get some results here before we know where to put our money. And that's what they did. Once the results started pouring in, that's when you could see the markets move. And they've continued to move today. Sorry, I'm trying my best not to sneeze. Nope, sorry. Nope. Sorry, couldn't hold it back. I had to sneeze. Now, what's interesting about this is the latest results have it with, yes, we're guaranteed 25. 1% chance right now of us getting a 50. Trick's hanging out with us is living the dream, Klaus. Yeah, I think this is a good way to end the year. Now, let's just make sure that we don't look too far ahead, because I don't know. I mean, January, I kind of wonder if the holiday season is going to have really good sales-wise. We're going to be paying attention there. So we want to hear what Jerome Powell has to say, because not only are we dealing with, yes, today's decision, but also the meeting on the 18th of December. Unknown Scorpion says, I'm here for the choo-choo. Everything else is just a bonus. I love it. Glenn says it's the Trump effect. How long can the Trump effect last, though? Like, seriously, I'm asking everyone an honest question. How long do you think that the election pump itself is going to last? Do you think that we got another couple weeks of this? You think we could keep this excitement up through November, December? Because think you're going to have some economic reports coming out here. You're going to have CPI data coming out that we're going to have to go through. We are going to have to go through holidays. So we're going to have to go through a whole bunch of stuff. So as long as they stay good, yeah, the markets can keep roaring green. But yeah, I want to hear from you. How long do you think the Trump effect can last? Almir says, Amsterdam says hello. Well, hello back to you from the wonderful state of South Carolina. Dom, appreciate the positive vibes. When 2 p.m. strikes Eastern time, we're going to go into here and we're going to see exactly what the announcement was. Until then, it is open forum. Danielle Francis says, hi, Klaus. How are you, mate? Body recovered from your race run? Mentally, I feel like 100%. I'm starting to really, really feel good mentally. Like, I had some problems, like, cognitively just for a few days, because you're, like, so, like, freaking hyped up, and your adrenaline's running for, like, how many hours? Physically, I cannot walk yet, so my joints feel really good, but, like, my feet, like, I can't walk yet. I still got way too much bruising, way too much swelling. The race was really tough. I had to finish it at night, and my headlamp went out. So, yeah, imagine running really fast at night, like kicking rocks and tree stumps and roots and shit like that. Hey, it was freaking nuts, man. Nick Howell says, are you near Myrtle Beach? No, I'm not. I'm an upstater. Glenn says, I guess the madness will begin in February or March. Yeah, you're going to get a new session of Congress in January. And we don't know how the House is yet. Let me do this. Let's do this. Let's go, election results. Here we go. All right, let's go to the House real quick and see. All right, it's 210 right now to 194. So, I mean, you're getting closer to the idea of a Republican sweep. Cliff Lopez says, how did you cut your hand? So when I was doing the race, it was pretty late in the race, mile 55, something like that, 56, somewhere around there, 55, 56, 57. When my headlamp went out, I was trying to catch up to these two girls. Like, they were running together. One was a pacer, and it was actually the girl that was the women's champion. And, like, I was trying my best to catch up, and I made up a ton of time. And when my headlamp went out, I had to, like, really push it, so I couldn't see, like, all the contours in front of me, and I just had to run. Well, I was still at the top of the mountain when my headlamp went, like, just to crap. So I had to run the whole down the mountain, and I didn't walk it. Like, I ran. I actually tripped, fell, and yeah, I sliced my hand open pretty good. It's healing real well, but yeah, it was awesome, man. It was really, really awesome. We got a bunch of people coming in here with the 50 basis cut. Let's look at that poll and vote now. You got 25 basis cuts, 25 basis point cut coming in right now at 48%. 50 basis cut point cut at 42%. Womble says, will Gary resign before getting sacked? What's going to happen is Gary is going to actually start looking for jobs, and Gary is going to get paid. Watch Gensler go to private and make a ton of money. I am telling you right now, what Gensler is making in his like SEC chair position, he's going to add like another zero to his paycheck. I am telling you right now. Yes, I was running after these two chicks, and the worst part about it was I not that I could have caught up to them, but like trying to catch them at night with like my headlamp on emergency power and not being able to see like the rocks on the trail. Some of the rocks are like the size of basketballs, and there was leaves all over because it's all fallen leaves. And so what with like the leaves would cover up a lot of the rocks, the stones, the tree roots. So I would just bash into stuff just over and over. It was freaking nuts, man. Moshtab is hanging out with us. Hello, sir. How are you doing? So getting back to Gary resigning, Gary's going to look for jobs now in the private sector. He's for real going to add another zero to his paycheck. I'm telling you this right now. He's going to get paid big time in private. He's not going to go back to school. That would be pretty much a demotion for him. So he's not going to go to academia. He is going to go private industry and watch him land a massive, massive job because he's going to have insider insight on everything. So, I mean, he's going to be, just saying, throwing it out there. Will he resign? I think it's going to be, he'll probably resign. Trump can push him out. There's a whole bunch of different ways he can go. But either way, he's done. He is gone. We do something like that, and it's called the lunacy run. Yeah, dude, it sucked, man, running at night like that. The run at night was cool. It just sucked with the headlamp. But, BTC, all-time high. Let's go to the screen. 76,634 for BTC. ETH is looking healthy as well. Gensler will go and work for Ripple. Oh my gosh. I'm telling you, he is gonna really lock it up. Rate cuts are, we're live actually right now, but rate cuts will be official in 3 minutes. So in 3 minutes, we're gonna start checking out the screens. Hello from Netherlands. Glenn says, I hope Gary will go in December. I don't know about December. That might be quick. January, I think for sure. Like, for real, like quick. Like, quick. I could see him taking a position where it starts in the beginning of January. And I think that's what you're going to see from Gary. He's going to land a position well before he's even out of office. He will start his own podcast called The Gensler Show and talk about how XRP is the one and it's all a show. Yeah, I don't think Gensler is going to be working for El Ripley. I don't see that happening. He is going to get paid, though. I'm just telling you right now. He is going to get paid. Sorry, getting a little bit of electrolytes here so I can keep recovering. I got a little bit of the ice pack on. He can come work for our shitty government. No, you do not want Gensler working for your government. Womble Stacker coming in, which what I'm thinking with is a 25 basis point today, 25 in December as well. Rudy Poo hanging out with us says, hey, there's gonna be a cut. Warren and Gensler 2028. Oh, what a card that would be, huh? How many votes would that one get? I'm going to keep refreshing this right here because as soon as this comes in, I'm going to read it and share it with you. It's all linked in the description down below. And by the way, what did everyone think of the election coverage? I thought that was pretty good. I thought I was keeping up with the numbers pretty well. I thought I did a good job bouncing from state to state, from federal elections to the state elections. I tried to do it as long as I could. I wasn't feeling good because of the race, but I really enjoyed doing it. So I'm definitely going to do more election coverage like that. I actually had a blast. I really, really had a blast. Any second now, we should be getting the statements here from the Fed regarding it. We're all thinking the same thing. 25 basis point cut is leading right now at 40 8%, waiting for it to all come through. Come on, you can do it, baby. I keep hitting refresh like a fiend. Trick says, great election coverage. Thank you, Trick. I appreciate that, man. I did. I had a blast, and the funny thing was, I was watching some of it later, and I was like, oh, crap. Like, dude, it sounds like just like what I was doing. It was pretty cool. Here we go. In order to support its goals, the committee decided to lower the target rate by 0.25%. So you got a 25 basis point cut, everyone. 25 basis point cut is in, and it is official right now. So if you voted for 25 basis points, guess what? You were a winner. We've been kicking the can down the road to avoid economic turmoil. What do you think they will accept first? Commercial real estate, banks and realized losses? Commercial real estate is going to have one hell of a hard pill to swallow, man. Would be a really, really tough. I'm telling you, commercial real estate is going to have a problem. A big part of the economy has shifted digitally, right? Warehouse model. You don't need storefronts anymore. So a lot of this retail space is just going to be needless. I mean, think about it. It's just, what's it going to be good for? Most of this stuff is being run out of warehouses now. So that's going to be big. You're going to see a lot for that. A lot of shipping needs too. Pay attention to that one. Fed cut it by 25 basis points. There you go. Cap City. AI says, Klaus, be careful. We don't need you doing a header into a tree running through the woods at night. Dude, it was so much fun. But like I had to run because when my headlamp would have gone like completely dead, I would have been like at the top of a mountain, like in the pitch black. And I would have literally have to sat down on the course in the pitch dark where like all like the bears and animals are and stuff and just wait for the next runner to come. So just throwing it out there. Donate my chicken dinner to charity. I like it. Like it. Unknown Scorpion says, yep, and did you see the downfall of China's manufacturing? Yeah, the thing is these economies are really based heavily on growth, right? You see that as a huge emphasis, right? It's growth. And if that growth slows down, then you don't have that extra cash flow coming in, and then they're worried about managing their back-end debt because they keep pushing the debt off. So yeah, I know exactly where y'all are coming from. Let's see. We got Patrick, which is Sweden. Patrick Dalton's in the house of Sweden. The pump's going to be green for weeks to come. Interest rates getting lower and lower are priced in. The market's over here. Trump mania is more gas on the fire, so it is great. Yeah, I'm telling you that you are seeing a Trump effect. I mean, it's the thing is this, okay? I don't want half the viewers to be upset, but I want everyone to recognize that honestly for the crypto markets, we're looking at this going, hey, just from a crypto point of view, look, any news we'll take at this point. Any good news we'll take at this point. Robert Melvin hanging out with us from up north. Go, what was that? Montreal Canadiens? Just throwing it out there. Where, or where are my Quebec Nordiques fans? Anyone for the Quebec Nordiques? Anyone? Robert Melvin says 25. 2 slow trickle cuts. Drag it out so they look better. Yeah, look for another 25 in December. Gary is definitely going to get paid, everyone. He's going to find a job before January, and I wouldn't be surprised if all of a sudden then come January he gets announced as a big job. Well, we're going to wait to see what Jerome Powell has to say about that. I'm kind of curious. I know you're going to be curious too. I've got the Fed up on the screen right here. Let me just expand that. And when the man JP gets on the mic, I will bring that on over to you. So let me... there we go. Get a little mutation right there. So yeah, we'll have that going on, and as soon as he gets onto the podium, I will go directly right there. Oh, the Nordiques. I got some Nordiques fan in the house. There we go. Quebec Nordiques. Yes, love Quebec, man. Crypto markets right now, though, I mean, you're seeing some interesting moves. You're seeing XRP a little bit bigger here up on the screen. ADA 88 making the move. Avalanche up 4% as well. Anyone out there thinking that H-Bar can make something happen? I mean, just getting pounded. Joe Sakic and Matt Sundin right there with you. Right there with you. Who is the goalie? Not Wah. Damn it, who is the goalie during that time? Oh man, I'm trying to think of who the hell it was. Either way, great times. Let's see. Mark Clark says, I got a massive feeling Gary's gone on the same date they slapped a lawsuit on Ripple. I think it was the 18th of December. Gary is definitely actively looking for a job right now, and he's not going back to academia. He's going to work for a private company and make some sick paper company. He is, because think, he's a government ex-government biggie. So he's got a lot of insight that a lot of companies are going to pay a lot of money for. Any surprises that y'all wanted to talk about in regards to the market? I mean, Bitcoin touching all-time highs. Does that surprise you? I didn't think so. ETH making a move. The alts and the secondaries making a move as well. Is it altcoin season? It's getting closer. We're at 32 out of 100. I mean, that's a good move. Robert Melvin's letting us know XLM is up 5%. Yep, up to a dime. That's right. Yeah, XLM volume has just been tough. Just been tough. Ron Hextall, I don't think that's who I'm thinking of goalie wise. I don't think so. I can't put my name on it. Unknown Scorpion says, shame on any company hiring him. They may experience an epic downfall themselves. But you got to think, Unknown Scorpion, Gary's got the inside view. He's also got connections. So think about it this way, okay? Like, I know Gary's a very hated person, but he's connected AF, right? He's connected with big banks. That he is connected with all sorts of stuff, right? I mean, let's just be real here. So people will pay for those connections. They'll gladly pay for those connections. Cody Zugg says, what's up, man? Going for a midday rug, 20-pound pack. Give me that news. The news is Jerome Powell and the Fed came out with a 25 basis point cut. So what does that mean? It means we're probably going to get another 25 basis point cut here coming up in December. Blocking comments, not a chance, girlfriend. I don't block jack shit-ola, as you all know. I let the chat fly. In fact, some of my chats are some of the worst ones, so I'm just throwing it out there. Gary is gonna start his own blockchain. GPS, Gensler's payment system, just to compete with Ripple and XRP. You're going to see a lot of Gary memes coming out there. Almir says, during dinner I mentioned BTC, and my wife slapped me in the face. Yeah, I got to be honest with you. My wife's not a crypto fan. My kids are not crypto fans. No one in my family is a crypto fan. I love it. I love the idea of this cutting edge technology that meets like cutting edge. We don't have regs yet. Wild West. Like, it's very rare to see like a big industry grow up while you're watching it grow. Like it's like we've all heard about like what happened like with the Industrial Revolution, right? We all heard about what happened when the printing press, right? Gutenberg and the printing press, when that happened. It changed everything. Yeah, some of us got to see the internet in the PC. Some of you might have been too young to experience that. I got to see it. I went through it with school. It was really cool. But this is something that you're going to see. A bunch of younger generations are into this. It's a newer tech. The laws aren't there yet. It's really awesome. It is really, really awesome. Ben Martin says, great job on the channel, bro. Excited about Trump crypto bull run. Yeah, I'm thinking that you're going to get some action here, all right? I do. I think you're going to get some action here. How long the election action lasts, it's simple. If you get a CPI report that sucks, then you're going to have to put this on pause, right? If you get jobs reports that start looking crappier and crappier, right, leading into Christmas, that's going to be a problem. That's just short-term stuff, right? These are the short-term things. You still got to also look at the housing mess that we're going to have to chew. In the next, couple of years, we're going to have to eat through, a big housing shortage, a high housing cost mess. it's creating a demand that's just nasty, but the money can't be spent because guess what? You can't spend it because it's on expensive homes. Frankie Ortiz is coming in now. Did we get the cut? Yes, we did. 25 basis points is what we got. Dipper Pines says, I think Gary might start to sell unlawful securities. And what about, what is it? Not just that, nefarious activities. Gensler's going to start his new payment system, which is untraceable for nefarious activities. Foz says, when I get home from work, my 12-year-old daughter puts on crypto news for me. That, I really like hearing stories where people are engaged with their kids. I'm very much engaged with my kids' lives. I get to see my kids every day. It's awesome. So when I read stories like that, I think it's cool. Let's see. It's been a hard life since I made all my siblings and my parents open up their cold wallets with 100 XRP. Then the kids' XRP cold wallets for each of my kids. Imagine XRP as large as BTC in 5 years. The thing you need to do with XRP when you compare it to BTC is you have to see if XRP is going to get that store of value play. Because that's been what's really propelling BTC has been store of value. That's why players are putting into the ETFs, because it's a safer investment tool. It's a safer pathway. So read the safer money, right, and how the safer money is moving, but also moving into a, quote, riskier store of value, right? It's not as safe as gold. It's a good way to put it. Super Shade Tutorial says you did a great job on the election. Well, thank you for that. I thought I did a good job on the election. I thought I did a good job keeping up with the numbers, with the stats, with the coverage. The only thing that has not been decided yet is the House. And let me take a quick drink right here. All right. The only thing that's been that hasn't been decided is the House. And right now you've got the Republicans that have gained 2 seats and sitting right now at 210. Democrats at 196 with a bunch of races still to be decided. Again, you get in a Republican-controlled House. We know the Senate's going there. We know the President's going there. You get all 3 happening. You could get a lot of new regs. You could get a lot of new stuff going on. You could get a lot of... It just things happen fast. A lot faster. Now, granted, this is the United States government, so at any time the United States government can decide to just screw things up, right? Let's be real here. At any time the United States government can really just jack things up for everyone and just piss in your Cheerios. And we have to keep that in mind. But, honestly, if we can keep inflation down, if we can keep wages strong, if we could fix this housing mess, that, would be huge. If we could start working together, that would be big. Now, I know these are a lot big things to ask for, but it's kind of what we need right now. We need to stabilize, right, all the war talk globally. We need that to really turn down. And that's part of the optimism you're seeing in the market right now. The part of the war talk, right, benefits the war industry. But when that happens, there's a lot of people that get scared and they don't spend money. And when they don't spend money, that doesn't help out a lot of retail-based things. So there's a lot of people that, hey, war doesn't benefit them, and in fact, it hurts their business model. So I think right there, you got to keep in mind that this is also a view of saying, hey, we want less geopolitical conflict. We want less conflict, period. Lester Sasher joining us. Welcome, entry-level supporter. Greatly appreciate it, Lester. Greatly appreciate all the channel members. Seriously, greatly appreciate everyone. The comments, I thought the election coverage was fun because we got to experience that live. And we talked about how important Georgia was, and how it was important that we even live tracked the ratios from different counties. So for anyone that wasn't there, the election coverage was like legit statistical stuff. It was up to the minute results. I brought news from both sides of the aisle. I thought I did a really good job being neutral with the coverage. And I'm glad that a lot of you joined in. Brennan says, between Trump winning, getting more crypto-friendly elected officials, and a 25% cut, I'm starting to see a snowball effect. Yeah, Brennan, and that's the thing. In the big picture is, think of those things that you listed, Brennan. Those things take money that's been sitting on the sidelines, conservative money. And I'm not talking about politically conservative. I'm talking about financially conservative money. financially conservative money sitting on the sidelines going, oh, we're not ready yet. We don't take much risk, right? You're low-risk players. Low-risk players will start getting into these riskier pools as those things start happening, right? As we start getting more greener events, like more cuts, more friendly elected officials, more regulations. That brings in the more conservative money, and again, not politically conservative money, but fiscally conservative money. So you're totally onto it, Brendan, and that's why I really wanted to open up the chat early for y'all today. I started the chat about 15-ish, 20 minutes early. We did chat only because I really wanted to give everyone in the chat opportunities to converse and share your comments and thoughts. So seriously, two-way street, thank you everyone. It has just been a blast. It's a hard life. Now a super supporter. Thank you. It's been a hard life. Seriously, the support is just amazing, everyone. I'm seriously humbled by all this. And soon enough, we're going to get to bring you Jerome Powell live. And the best part about it is what? Well, guess what? Comments are turned off on their streams, but comments are not turned off on my streams. Kevin Brown says, you're pumped. I love your energy and honestly. Kevin in the UK. Yeah. And serious shout out to all the fans from across the pond that joined us for election coverage. And shout out to all the fans from outside of the United States that have been following U.S. politics, U.S. policy, U.S. laws, regulations, and all that stuff. The interest that you all have is amazing. And for the fans in the States, isn't it cool to see people from all over the world, like getting in and like listening to this stuff? Like this is like a dream come true for me. Seeing like a channel where we're all coming together, we're sharing people. Like I like this. I don't know how else to explain it. I'm very positive. I really enjoy doing this. Like if I was ever offered another really high position corporately, I would say no because I love doing this way too much. I really do. It's been a hard life says, it's your brain, Klaus. We like it. Wear a helmet. I do. I wear a helmet when I'm on the road bike, but not when I'm riding. Christine Dryden says, yay, Klaus. Well, thank you. I appreciate that. Glenn says, if the SEC will be Republican, will they drop the appeal against XRP? You know, the thing with that is, Glenn, is obviously you're going to get a Republican-leaning head to be appointed to the SEC. And with that, Glenn, I don't think they're going to mess up anything that's in play unless something new legally comes out. But right now, we're not really arguing anything new. We're just in appeals, right? There's no new evidence coming in. And honestly, the appeals courts, Glenn, they're going to do the work for Ripple. Like, honestly, the SEC doesn't have much of a chance in the appellate court. It's not statistically a good place for them. Scott says, love from South Africa. Our government hates Trump, but many of us love him. Scott, we saw in the United States a very, very big swing here, where even in urban areas, there were more people voting Republican. And what I think we're learning here, and this gives me hope. You want to know what gives me hope? The fact that I saw Democrats voting more towards the Republican side, and I even saw some of the Republicans go over to the Democrats. We want moderism, everyone. We don't want extreme this way or this way. We want more stuff in the middle. We all want our crypto. We all just want to take tons of tasty bong rips. Sorry if there's kids watching, but normally my videos have like an adult warning, right? We all want to drink. We all want to go out hunting and stuff like that, right? We all want to drive sports. We want everything. Like, we don't want to be told strict specifics regarding stuff. And I think that's one of the big messages to take away from all this is the vote was about moderism. It was really very interesting to see. A lot of women went out and voted more Republican than they did Democratic. Citing safety is a big concern. Citing budget, finance is a big concern. Robert Melvin says this is the best community in crypto. I appreciate that. That means a lot because I know a lot of you out there watch multiple channels, and I'm glad you do. Yes, I said it, Futures Research. I know you guys and gals watch other channels out there, and I think you should. I think you should watch multiple channels. Get multiple points of view. You don't want to be in an echo chamber, and that's what I pride myself here with this channel. We've got people from both sides of the aisle. We got people that are pro-crypto, anti-crypto, neutral, pro-government, pro Ripple Pro 80. We got everyone here, and it's awesome, and we all get to share it. Now, in terms of getting to share, we're just waiting for Jerome Powell, the Fed, to come on the mic, which should be in about 10 minutes. As soon as Jerome Powell goes up on the old mic, Ola, we will go live to that feed. I'll cut my mic off, and we can all watch, and I'll hang out in the chat, and then we'll do more at the end. So hopefully y'all are cool with that. As of right now, though, market is looking juicy. I don't know how else to put it. This is good stuff. This is a sign that the money on the sideline is good, that there's a decision, and good that like they feel they can put more money into it, that the optimism is there. This doesn't mean that it's a guaranteed home run. No, this tells you that there's optimism. When you get like an election movement like this on any market, that's that optimism of change. So really, really interesting, good. Any good recommendations? Recommendations for what kind, sir? Arnuk says, keep up the good work, Klaus, good or bad. We love you anyway. Yeah, that's been some of the hardest things, honestly, to cover, has been bad news, because I lose a lot of subs when I do bad news. You know, like when some of like the BS news comes out and like I debunk the BS news, there's a lot of people that do not like that. A lot of people. But you got to bring the news good or bad. Like, you got to. You got to be honest with people. You got to shoot it to them straight. You can't screw them over. And you got to let people make their own choices. And that's what I hope you all do, too, is you make your own choices using a bunch of news sources. Kevin Brown says, I agree. You say it as it is. When does XRP pump? XRP is starting to move, okay? I was shocked on this move right here, but this is a healthy test. This is a very healthy test. Miguel Casillas, yes, cut it 25 basis point cut. Let's see. What's interesting is these XRP moves, we weren't really expecting this per se, right? Not at this specific time and so forth. So I think these tests are healthy. I really do. Manny says, any other YouTube channels? The other YouTube channels that I would recommend you watch are all like for like fun and adventure stuff, not for crypto. I'm just like, that would be seriously, the only time I would give recommendations on what channels to watch, or like maybe some mystery channels. Like I could think of a few of those. Conspiracy channels, I kind of like that stuff, you know, just throwing it out there. No worries, Miguel, I got you covered. That's right, it was a 25 basis point cut with probably another one coming in December. Right now, XRP volume sitting at 2 billion for the last 24 hours. Volume is going to keep XRP alive. Big thing it is. It's going to keep XRP alive. It's going to keep the want for ETFs going. Pop Trade 2, Trey's podcast says, started watching your channel a few months ago. Love it. Keep it going. You're not one-sided with your info. It's the best attribute. XRP Army member. I appreciate that. I really do. I appreciate it because I'm glad that people recognize that I try to bring both sides of stuff. I do. We all have our own personal views, right? Like, we really do. But I don't want my personal views to, like, influence how you feel, so I really try to be neutral, so thank you. You're a flat earther. No, I am definitely not a flat earther. I'm a huge Dr. Becky fan. I'm a huge PBS Space-Time fan. Oh, what about Fermilab? Yeah, been there plenty of times. Love me some Fermilab. Ask Joe. My son's channel. Thank you, Frankie Ortiz. Yeah. Thank you, everyone. Good or bad, happy or sad. That's right. I need my opium. I'm an addict for fantasy stories. Yeah, I think the fantasy right now is that we need to see if there's enough money in the market that wants to come in. Does the money wait till the official new regime takes over? I think that's very something that's noteworthy, right? Holiday sales. You think holiday sales are going to be good? Because think, when holiday sales are bad, right, that's like discretionary money. Crypto falls in that discretionary money pool. So we got to also start tracking holiday sales. Let's see. Hold on. Ian Williams says, hi, Klaus. Greetings from Wales, UK. Have you heard Gensler is under investigation? Just seen a post? No, I have not had anything come across on my feed. I have a whole bunch of alerts set up on my phone, and I have not gotten anything regarding that. And I usually get stuff pretty quickly. Steve says, Klaus, can you please do a meme coin live stream in the near future? Like, what kind of meme coin live stream would you like to do? I mean, like, I guess, like, I just don't know how much, I like, would people think it's fun to do a meme live stream? I mean, I don't know. Let me know what y'all think about that. Let's see. JC3 says, I just want that 10K XRP. Interesting thing about this. Do you know who the biggest winner was, by the way, price-wise? Was Coinbase's stock. Think about that one. Coinbase made some big moves, man. Made some big moves. You keep that in mind. I find it interesting that traditional finance is starting to wriggle their way into crypto and making on big moves. Pascarable says, also, your take on gaming crypto would be great. Gaming crypto is tough. I'm going to be honest with you. I'm going to be honest with you. And mainly, I'm going to put it to you this way. Gaming itself is tough. Okay? Jimbo Tango says, Klaus coin to the moon. There is actually a Klaus coin out there, but it's for Klaus the Fish from American Dad. Just throwing it out there. But gaming right now, I think the hard part with gaming is there's not a lot of new innovative stuff out there. VR headsets are still kind of bulky, clunky. It's not the same. The games are still kind of you know what I mean? The Call of Duty games are only hot for like 2 months and then it dies out. Final Fantasy, hey, we know the best ones have been the older ones. So, I'm just throwing it out there that you have to be honest with yourselves and know that gaming itself is not in a good spot right now. Indie gaming is pretty legit. There's a lot of good indie games, I think, that you got to think about. And I think what you want is you want gaming and crypto integrated, but you don't want to know crypto is integrated in gaming. Except, I would say this. I would love to see some legit games, like, that are clones of very popular games out there where you could bet, like, against your opponent. Like, I love playing Rome Total War, all right? I'm a huge Rome Total War 2 fan. Like, huge Total War 2 fan. I would love to be able to wager an opponent and play matches against them. Or a Gran Turismo sort of thing. Like, I would love to, like, race people and wager. I think that would be cool. But you just don't want the game to feel clunky. Commando Spawn says, 3-year XRP price prediction, melting faces. I think as long as you get regs coming in and you start getting some use cases for XRP, you can see decent price action. You really can. But you need a few things to happen. Seriously, you need a few things to happen. And honestly, when it comes to XRP, what do you need? You need some follow through with some of these big projects that actually use and create a demand cycle for XRP. Because you can't keep basing it on forward-looking hopium. Sooner or later, you have to start harvesting those gains. You remember on Always Sunny when Mac was cultivating? He's like, I'm cultivating mass. And they're like, dude, no, you need to start harvesting. Like, that's the whole thing. All right, we need to start harvesting some of these news stories when it comes to XRP. Trick's supporting out as well. Everyone, give a big thank you to Trick, and also give a big thank you to Commando Spawn for supporting the channel. Anytime someone supports the channel, it is tradition to thank them because it keeps us, sponsor free. So if we're sponsor free, that means I can give you the unbiased news. Like Klaus preaches regulatory clarity and utility. I think once you get regulatory clarity, you're going to see more money flow into the market. Once you see these projects that they keep talking big game about actually yield results, right? Then you're going to see something cool. But until then, it's just been a lot of hopium. We need some of these projects to cross the finish line. And again, Trick, Commando Spawn, thank you so much for supporting the channel. I really do appreciate it. I really do. JC3 says, thanks to the supporters. Yeah, it is. It is really cool. It is really cool to have support. And it's really cool to know that, we can share this stuff together. I thoroughly enjoy this. Hopefully y'all see the excitement and the enthusiasm and how, I'm enthusiastic like every video, even with like the bad news. People are always like, oh dude, why are you always so happy with the bad news? Because like I love doing this. Like, so I know the bad news sucks, but like I still love doing this. I still love doing the news. Like Dream World would be like if I could have like a professional built news channel, like where I get to do the elections and stuff like that. Oh, look who we got up on the screen. It's my man JP, who's about to get, well, not mean, because he already gave us a 25. So yeah, we're gonna wait till JP comes into the hood here, drops his mic. When JP comes on, I am going to here we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has eased substantially from a peak of 7% to 2.1% as of September. We are committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 1/4 percentage point. We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 104,000 per month over the past 3 months. This figure would have been somewhat higher were it not for the effects of labor strikes and hurricanes on employment in October. Regarding the hurricanes, let me extend our sympathies to all the families, businesses, and communities who have been harmed by these devastating storms. The unemployment rate is notably higher than it was a year ago, but it has edged down over the past 3 months and remains low at 4.1% in October. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years. Total PCE prices rose 2.1% over the 12 months ending in September, excluding the volatile food and energy categories. Core PCE prices rose 2.7%. Overall, inflation has moved much closer to our 2% longer run goal, but core inflation remains somewhat elevated. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.5% to 4.75%. This further recalibration of our policy stance will help maintain the strength of the economy and the labor market and will continue to enable further progress on inflation as we move toward a more neutral stance over time. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. We are not on any preset course. We will continue to make our decisions meeting by meeting. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation is not sustainably moving toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can move more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Thank you. Given the expectation that the election outcome will produce policies that would meaningfully impact the U.S. economy next year, how is the committee taking these proposals into account for upcoming decisions, including potentially the next one in December? And can you give us any more sense of how proactive or reactive the Fed is prepared to be to changes in economic policies with the next administration?
Sure. So let me say that in the near term, the election will have no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume. Now, just in principle, it's possible that any administration's policies or policies put in place by Congress could have economic effects that over time that would matter for our pursuit of our dual mandate goals. So we, along with countless other factors, forecasts of those economic effects would be included in our models of the economy and would be taken into account through that channel.
Nick.
Chair Powell, Nick Timros from the Wall Street Journal. Roughly 1 year ago, when the 10-year Treasury was flirting with 5% and 30-year mortgage rates were near 8%, you noted how higher borrowing costs, if they were sustained, could weigh on economic activity. Given that you've said you believe policy is restrictive and the Fed is now dialing back that restriction, are the growth risks presented by higher U.S. Treasury yields today any different from those you identified 1 year ago when inflation was still meaningfully above your target?
So I would just say this: we've watched the run up in bond rates, and it's nowhere near where it was, of course, a year ago. I guess the long run rates are well below that level. So we're watching that. Things have been moving around, and we'll see where they settle. I think it's too early to really say where they settle. Ultimately, I'm sure we've all read these decompositions of what, and I certainly have, but it's not really our job to provide our specific decomposition. I will say, though, that it appears that the moves are not principally about higher inflation expectations. They're really about a sense of more likelihood of stronger growth and perhaps less in the way of downside risks. So that's what they're about. We do take financial conditions into account if they're persistent and if they're material. then we'll certainly take them into account in our policy. But I would say we're not at that stage right now. It's just something that we're watching. And again, these things don't really have mainly to do with Fed policy, but to do with other factors in the economy.
If I could follow up, is the September SEP, are those rate projections still valid? Do they still seem relevant given where we are now?
You know, you get halfway through the cycle between the last set and the next set. I wouldn't want to comment one way or the other. You know, let's talk about the data we've gotten since the last meeting. So in the main, the economic activity data have been stronger than expected. The NIPA revision was stronger. Certainly the September employment report was stronger. The October report, not stronger. Retail sales stronger. So overall, though, I think you take away a sense of some of the downside risks to economic activity having been diminished with the NIPA revisions in particular. And so overall, feeling good about economic activity. So I think we would factor that in. At the same time, we got one inflation report, which it wasn't terrible, but it was a little higher than expected. So I think really the question is December, and you know, by December we'll have more data. I guess one more employment report, two more inflation reports, and lots of other data, and you know, we'll make a decision as we get to December.
Gina Smilik from the New York Times. Thanks for taking our questions, Chair Powell. When it comes to December, what will you be looking at specifically as you try to make that decision? And then as of the Fed's economic projections in September, you had written down 4 quarter-point interest rate cuts in 2025. Do you still think that those are likely? Is that sort of the baseline outlook at this point, or has that shifted? And if it shifted at all, can you give a little bit of detail as to why?
You know, we don't fill out an SEP, and I can't characterize one that wasn't filled out today. So I can't really speak for kind of exactly where the committee is. I will just say for December, we're going to be, again, at every meeting, we're going to be looking at the incoming data and how that affects the outlook. As you know, we're in the process of recalibrating from a fairly restrictive level at 5.33%. After today's move, we're down 75 basis points. And we're asking ourselves, is that where we need to be? You know that we're trying to steer between the risk of moving too quickly and perhaps undermining our progress on inflation, or moving too slowly and allowing the labor market to weaken too much. We're trying to be on a middle path where we can maintain the strength in the labor market while also enabling further progress on inflation. We think that's where we are, but that's the question we're going to be asking in September. And in other meetings. And again, I can't really update you on the committee's thinking because we don't fill out an SEP at this meeting. Yeah,
totally appreciate that. I guess when it comes to your own thinking, do you think that a full percentage point of rate cuts in 2025 is a reasonable outlook?
Again, we're going to wait and see how things come in December. I mean, it's just, I would put it this way. We're on a path to a more neutral stance. And that's very much what we're on. That has not changed at all since September. You know, we're just going to have to see where the data lead us. We have, you know, a whole 6 weeks of data to look at to make that decision in December. Obviously, I'm not ruling it out or in, but you know, I would say, you know, I would say that. You know, again, we didn't update the SEP, so I'm not going to characterize, you know, where the committee would be.
Howard.
Thanks, Howard Schneider with Reuters. I wondered if you could please elaborate, explain a little bit the 2 changes in the language of the statement here. In the first paragraph, when you say inflation has made progress, dropping the word further progress. And in the second paragraph, dropping the sentence that the committee had gained greater confidence that inflation was progressing towards its 2% goal. Is there any policy substance behind either of those changes in language? Is it meant to open the door to a December pause? Is it meant to communicate anything about the stickiness of core inflation in the last 3 months?
Not really, no. So let me tell you what we were thinking. So the test of gaining further confidence was our test for the first rate cut, right? And so we met that test in September, and therefore we take that test out. If you leave it in, then it's new forward guidance. It's brand new forward guidance. What do you mean by it? Are you requiring yet further? We have to say yes or no at every meeting whether we've made further progress. The point is we have gained confidence that we're on a sustainable path down to 2%. So that I would tell you is what that's really all about. It's not meant to send a signal. Neither of those is meant to send a further signal. And saying further progress, it becomes a test. We don't want to be. We don't think it's a good time to be doing a lot of forward guidance. There's a fair amount of uncertainty in that. In what I've said, the path that we're on, we do know where the destination is, but we don't know the right pace, and we don't know exactly where the destination is. So the point is to find the right pace and the right destination as we go. And I think there's a fair amount of uncertainty about that, and you don't want to tie yourself up with guidance. You want to be able to make sensible decisions as you go.
Steve Leisman, CNBC. Mr. Chairman, you talked about higher rates, perhaps from an expectation of higher growth. You didn't talk about it in terms of expectations of higher deficits. Is that something you think might be behind the recent rise in interest rates, and are rising deficits a concern to you?
So we don't comment on fiscal policy, and again, I don't have a lot more to say on what's driving bond yields. In terms of policy changes, though, let me give you a sense of how this works in the ordinary case. Let's say Congress is considering a rewrite of the tax laws. Doesn't matter what's in the content. So we would follow that. At a certain point, we'd think we see the outlines, so we'd start to model it. And then we'd wait, and then at a certain point, the staff would brief the FOMC and say, these are the likely effects. There's lots and lots of literature on the effects of tax policy changes on various parts of the economy. So we'd try to get smart on that, and then the law actually passes. And you'd start to put it. You'd probably run an alternative simulation before that happens, just to keep people trying to understand it. Then when it actually passes, it goes into the model, along with a million other things. So, we have a very large economy. Many things are affecting it at any given time, and a law change of some kind would go in there, but it would go in. But it would, it's a process that takes some time. Clearly, the legislative process takes a lot of time, and of course, the real question is not the effect of that law. It's all of the policy changes that are happening. What's the net effect? And the overall effect on the economy at any given time. So I think that's a process that takes a lot of time, and that we go through all the time with every administration, constantly. And this will be no different. But right now there's nothing to model right now. It's such an early stage. We don't know what the policies are, and once we know what they are, we won't have a sense of when they'll be implemented or all those sorts of things. So I think I would just say we're not doing that now, and all that will take time, and it will be very much regular order when we do that.
If I could just follow up on Nick's question, are the current rates something you feel like you need to lean against, in that they go against the direction of policy by adding restriction to the economy, or do you just take them as a given and perhaps a signal that you should do less?
Look, I just think the first question is, how long will they be sustained? If you remember the 5% 10-year, people were drawing massively important conclusions, only to find, 3 weeks later, the 10-year was 50 basis points lower. So, it's material changes in financial conditions that last, that are persistent, that really matter. And we don't know that about these. What we've seen so far, we're watching it, we're reading, we're doing the decompositions and reading others, but right now, it's not a major factor in how we're thinking about things.
Chris.
Thank you, Chris Rugaber at Associated Press. You mentioned the positive economic data that we've seen since the September meeting, including the revisions to things like savings, higher GDP growth. We saw a stock market jump yesterday. That's renewed some of the questions about why do many cuts at all in this with this backdrop.
So you're right. As I mentioned, and as you mentioned, the latest economic data have been strong, and that's, of course, a great thing and highly welcome. But, of course, our mandate is maximum employment and price stability, and we think that even with today's cut, policy is still restrictive. We understand it's not possible to say precisely how restrictive, but we feel that it is still restrictive. And if you look at our goal variables, the labor market has cooled a great deal from its overheated state of 2 years ago and is now essentially in balance. It is continuing to cool, albeit at a modest rate, and we don't need further cooling, we don't think, to achieve our inflation mandate. So that's the labor market. Inflation has moved down a great deal from its highs of 2 years ago, and we judged, as I mentioned, that it's on a sustainable path back to 2%. So the job's not done on inflation. But if you look at those two things, we judged in September that it was appropriate to begin to recalibrate our policy stance to reflect this progress, and today's decision is really another step in that process. Overall, as I mentioned, we believe that with an appropriate recalibration of our policy stance, we can maintain strength in the labor market even as our policy stance enables further progress toward our inflation goal.
Great. And just to follow up, what might cause you to pause rate cuts in December? What kind of economic data would lead you to that path? Thank you.
So we haven't, made any decision like that at all. But we're in the process, as I mentioned, of moving policy down, our stance down over time to more neutral level. And as a general matter, as we move ahead, we are prepared to adjust our assessments of the appropriate pace and destination as the outlook evolves. So, for example, if we were to see the labor market deteriorating, we'd be prepared to move more quickly. Alternatively, as we approach levels that are plausibly neutral or close to neutral, it may turn out to be appropriate to slow the pace at which we're dialing back restriction. Again, haven't made any decisions about that, but that's certainly a possibility. If you can think of it as similar to what we do with asset with asset runoff, with QT. So we reach a point where we slow the pace, much like an airplane reaching the airport slows down. And so we're thinking about it that way, but it's something that we're just beginning to think about.
Edward.
Thanks, Chair Powell. So with the noise in the jobs reports that we've seen, and you look at the Fed's favorite inflation, PCE inflation, overall it's 2.1%, very close to the Fed's target, but core inflation is 2.7%, and it's been that way since July. So why doesn't this data give fuel to a rate pause for this meeting?
Well, so I think if you look at the 3 and 6 month, you're quoting the 12-month. So we look at all of them, right? But if you look at 3 and 6 month core PCE, you'll see they're around 2.3%. So we look at all of them, and we look at 12 as well. But what it's telling us is that we really have made significant progress, and we expect there to be bumps. For example, the last 3 months of last year, the core PCE readings were very, very low, probably unsustainably low. So that's why forecasts generally see a couple of upticks toward the end of the year. On the other hand, the January reading certainly looks like an example of residual seasonality, so that we saw last year. So when that falls out of the 12-month calculation in February, we should see a thing down. So it'll literally be a bump up and then down. We understand that. Overall, you see the progress on inflation, and you also look at the economy and you say, what is the inflation story now? Where's it coming from? So I point to a couple of things. One is the non-housing services and goods, which together make up 80% of the core PCE index, are back to the levels they were at the last time we had sustained 2% inflation, which happens to be in the early 2000s for a period of 5, 6, 7 years. So they're back to that level. What's not is housing services. So let's talk about housing services. Housing services is higher. What's going on there is, market rents, newly signed leases are experiencing very low inflation. And what's happening is older, leases that are turning over are taking several years to catch up to where market leases are, market rent leases are. So that's just a catch-up problem. It's not really reflecting current inflationary pressures. It's reflecting past inflationary pressures. So that's one thing. The other thing is I'd say look at the labor market, not a source of inflationary pressures. Where's it coming from? It's not a very tight economy. What is the story about inflation? You see that catch-up inflation also in insurance and several other areas. So you're seeing we're not declaring victory, obviously, but we feel like the story is very consistent with inflation continuing to come down on a bumpy path over the next couple of years and settling around 2%. That story is intact, and it won't be one or two really good data months or bad data months aren't going to really change the pattern at this point now that we're this far into the process.
So you're quickly trying to get to that neutral rate that you see, or do you foresee that you have some time to get there?
Nothing in the economic data suggests that the committee has any need to be in a hurry to get there. We are seeing strong economic activity. We are seeing ongoing strength in the labor market. We're watching that carefully, but we do see maintaining strength there. And so we think that the right way to find neutral, if you will, is carefully, patiently. Again, that's not meant to have a specific meaning, other than to the extent the economy remains strong, we have the ability to take advantage of that as we try to navigate that middle path between the two risks.
Craig.
Hi, Chair Powell. Craig Torres from Bloomberg. Two questions today. Did you learn anything about what Americans think about the economy from the election results? First question. Second question. I want to talk about some labor market indicators, and I do so with great respect for your attentiveness to the maximum employment side of the mandate, Chair Powell. So the unemployment rate has been at 4% or higher for 6 months. One of the broadest measures of unemployment is up about 0.5 point from a year ago. Compensation gains are sliding back. The quits rate, a signal of labor market dynamism, has been heading down to that bad neighborhood of the 20 teens. So you have put a marker at Jackson Hole saying any further cooling is unwelcome. It is cooling generally a little bit further. So at what point do we reach what you would describe as a shortfall from maximum employment? Thank you.
Sure. So on your first question, I'm not going to talk about anything that relates directly or indirectly to the election. On the second one, this is the great question, and it's the one we think about all the time. So I'll just say a couple things. There's nothing really surprising here. What we know is that the unemployment rate is low. We also know that it's moved up significantly from a year or so ago. So we've seen a big change upward in unemployment. Sometimes that has meant bad things. So far, it doesn't appear to be. It appears that I wouldn't say that the labor market has fully stabilized, because I do think it's continuing to very gradually cool, but it seems to be in a good place, and our policy, of course, is designed to keep it in that good place, to maintain the strength in the labor market, while also enabling further progress on inflation. You mentioned a bunch of indicators, and you're right. The openings to unemployment rate is back to a normal level. I would characterize it more broadly as normalizing. You mentioned wages. Wages are still running just a bit above where they would need to be consistent with 2% inflation, unless productivity is going to remain at this high level. If we see productivity, more sustainably at these high levels, then that would sustain higher wage gains. So I would say, in fact, you can say it the other way, that wage increases are now consistent with 2% inflation, given current productivity readings. But of course, the lore on productivity readings is whenever you see high readings, you should assume they're going to revert pretty quickly to the longer-term trend. That has always been the case for 50 years. But it may be that we're now 5 years. If you look at the NIPA revisions that came out a month ago, we're 5 years into a nice set of productivity readings, which are sustained and very healthy. But overall, it's a good labor market. We could talk about 20 different data series. We'll be looking at all of them, of course. We don't want the labor market to soften much from here. We don't think we need that to happen to get inflation back to 2%.
Victoria.
Hi, Victoria Guido with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
Mike?
Michael McKee from Bloomberg Radio and Television. You talk a lot about what the data are telling you and how you are dependent on the data, but in terms of forward-looking assessments of the economy, what are you hearing from CEOs or other officials around the country? What did you hear today from the regional bank presidents about what companies and consumers think about where the economy is going from here rather than looking backwards? And does that match up with what your forecasts have been and what you think the appropriate policy path should be?
So it's hard to characterize a really interesting set of discussions we had, and of course you'll see them in the minutes in 3 weeks. But I would say this: I think the comments from our Reserve Bank colleagues and from the CEOs that they talk to are pretty constructive on the economy right now. Pretty constructive, feeling that the labor market is back to normal, to the point where it's no longer that much a discussion topic in their worlds, whereas 2 years ago it was all they were talking about. So they feel like the labor market's in balance. People feel good about where the economy is. Demand is obviously pretty strong, and you're seeing 2.8% growth in the third quarter estimated. Maybe the year's 2.5%. This is a strong economy. It's actually remarkable how well the U.S. economy has been performing with strong growth, a strong labor market, inflation coming down. We're really performing better than any of our global peers, and I think that is reflected in what you hear from what I hear people hear from CEOs. I don't get to talk to a lot of CEOs in my job, but I hear what others summarize from those, and of course I hear the Reserve Bank presidents do a lot of that, and it's pretty constructive overall. Now, that's not to say there are areas of caution and things like that, but ultimately, overall, pretty positive.
Well, to follow up, the areas of caution, if there were black clouds on the horizon that you identified as something you're watching, what would they be?
I think it's things like, clearly geopolitical risks around the world are elevated, and just as clearly they've had relatively little effect on the U.S. economy. Now, that can change through the price of oil or otherwise, but people talk about those as something that's on the horizon all the time. But ultimately, if you look at the U.S. economy, its performance has been very good, and that's what we hear from business people, and expectation that will continue. If anything, people feel next year. I've heard this from several people that next year could even be stronger than this year.
Andrew.
Hi, it's Andrew Ackerman with the Washington Post. I just wanted to follow up on the discussion earlier on fiscal policy. Your predecessors, Greenspan and Volcker, spoke up loudly when they thought large budget deficits endangered economic or financial stability. Will you do that too? And right now we're in a period of full employment. We have large budget deficits and debt at historic highs that are rising. Is that something you'd speak out against?
So, I have said many times, no more, no less than what the predecessors you mentioned have said. And what that is that the U.S. federal government's fiscal policy is on an unsustainable path. The level of our debt relative to the economy is not unsustainable. The path is unsustainable. And we see that in, you've got a very large deficit you're at full employment, and that's expected to continue. So it's important that we, that to be dealt with. It is ultimately a threat to the economy. Now, I can say that. I don't have oversight. We don't have oversight over fiscal policy. I've said it on many occasions, just said it again.
Okay, thank you. I guess the other question is, to follow up on Victoria's question, do you believe the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Not what?
Not permitted under the law.
Thank you.
Courtney.
Courtney Brown from Axios. In response to Howard's question, you said it wasn't an ideal time to give forward guidance because of the economic uncertainties. Can you lay out what some of those uncertainties are and whether or not it includes some of the proposals that the president-elect has put out on the campaign trail? Tariffs, for instance?
No, I was not referring to the new administration's policies at all, nor will I today. So what I'm just saying is, as we look ahead, we know, and I mentioned this in my statement, that the risks are two-sided. I guess I should start by saying that we think that the economy and we think our policy are both in a very good place, And, but as you look forward, you say, what are the risks? And one risk is that we would move too quickly and find ourselves having moved too quickly and inflation comes back and we lost our chance to get inflation back to 2%. So we have to avoid that risk. And to avoid that risk, that means you want to move carefully. The other risk is that we move too slowly and that we allow the labor market to weaken too much and do unnecessary damage to the labor market and to people's working lives. That says don't get behind the curve. So these two things are the two risks that we have to manage. And so we're in the middle there. We try to be in the middle and deal with manage both of those. Again, the idea is to support the strength we have in the labor market and in the economy, but also with somewhat less restrictive but still restrictive policy, enable further progress toward our 2% inflation goal. So there's, this is a thing we're meeting by meeting, we're going to be making our assessment of what the right path is. It's not as important, the precise timing of these things is not as important as the overall arc of them. And the arc of them is to move from where we are now to a sense of neutral, a more neutral policy. We don't know exactly where that is. We only know it by its works. We're pretty sure it's below where we are now. But as we move further, there will be more uncertainty about where that is. And we're going to move carefully as this goes on so that we can increase the chances that we will get it right.
Simon.
Thank you, Chair Powell. Simon Rabinovich with The Economist. I know you don't want to share your decomposition of bond yields, but if you look at the break-evens, it is clear that longer-term inflation expectations do seem to have risen, up at about 2.5%, for example, on the 5-year. That's up half a point from when you cut in September. Do you have any concern at all that longer-term inflation expectations are de-anchoring, or put another way, are anchoring at a slightly higher level? Thanks.
So we would be concerned if we thought we saw longer-term inflation expectations anchoring at a higher level. That's not what we're seeing. We're still seeing, between surveys and market readings, broadly consistent with, I looked at the 5-year earlier today, and it's probably moved, but it's just not. It's kind of right where it's been, and also it's pretty close to consistent with 2% PCE inflation. So that's one that's been a traditional one that we look at a lot. But overall, expectations seem to be and really have throughout this in a place that's consistent with 2% inflation. But you're right to say we watch that very carefully, and we will not allow inflation expectations to drift upward. But that's really why we reacted so sharply back in 2022 was to avoid that.
Kelly.
Hi, Chair Powell. Kelly O'Grady, CBS News. We just talked about what you've heard from business leaders on the economy, but many average Americans are still not feeling the strength of the economy in their wallets. So what's your message to them on when they might expect relief?
So you're right that we say the economy is performing well, and it is, but we also know that people are still feeling the effects of high prices, for example. And the world went through a global inflation shock, and inflation went up everywhere, and it stays with you because the price level doesn't come back down. So what that takes is it takes some years of real wage gains for people to feel better. And that's what we're trying to create, and I think we're well on the road to creating that. Inflation has come way down. The economy is still strong here. Wages are moving up, but at a sustainable level. So it's just I think what needs to happen is happening, and for the most part has happened. But it'll be some time before people regain their confidence and feel that. And we don't tell people how to feel about the economy. We completely respect what they're feeling. Those feelings are true. They're accurate. We don't question them. We respect them.
And just a quick follow-up. President-elect Trump has been critical of your performance. Any concern about his influence on the Fed's independence?
I'm not going to get into any of the political things here today, but thank you.
Nancy.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. What is your plan if we start to see stagflation?
So that's the whole plan is not to have stagflation, so we don't have to deal with it. So that is actually our plan. It's of course a very difficult thing because anything you do with interest rates will hurt one side or the other, either the inflation mandate or the employment mandate. I would just say that we've been able to see inflation come down a whole lot, much closer to our goal, without the kind of sharp increase in unemployment that has often accompanied programs of disinflation. So, knock on wood, we've gotten this far without seeing a real weakening in the labor market, and we believe we can complete the inflation task while also keeping the labor market strong, and that, of course, is exactly what we're trying to do.
Can you rule out an interest rate hike next year?
No, I wouldn't rule anything out or in that far away, but that's certainly not our plan. I mean, our baseline expectation is that we'll continue to move gradually down towards neutral, that the economy will continue to grow at a healthy clip, and that the labor market will remain strong. If you look at our that will not change from the September SEP. That is our baseline forecast, and short of some exogenous event, that will continue to be our forecast for the foreseeable future. So, but ultimately, we're not in a world where we can afford to rule things out a full year in advance. There's just too much uncertainty in what we do.
Let's go to Jean for the last question.
Hi, Chair Powell. Jean Young with MNI Market News. I wanted to go back to a comment that you had made about Americans being quite unhappy about the cumulative price level rises over the past few years, even though now inflation is back on a path to 2%. Would it be appropriate for the Fed to undershoot for a while on its inflation goal under the average inflation targeting regime, so people have a chance to catch up?
No, that's not the way our framework works. We're aiming for inflation at 2%. We did not think it would be appropriate to deliberately undershoot. And part of the problem there is that low inflation can be a problem too, in a way. But that's not part of our framework, and it's not something we're going to be looking at in our framework review. Thank you very much.
All right, so there you have it. Jerome Powell on the mic basically saying, hey, look, things are looking good, but there's some things we're going to have to pay attention to. So the questions were different. The questions were very different today. There was a sharpness to them. There was a little bit of a sting, a little bit more of like a whip, a snap to it. I don't know how else to explain it. Pascarable says, was it me or did he get really pissy at the end? Yeah, he was not happy with the political questions. He does try to be very, very neutral, very, very independent, and I'm cool with that. I think he does a really, really good job. Oh, that's sorry to hear, Sniff. That is not good news, my guy. That is sad. But we're starting to see Powell say, hey, look, things are getting better with X, Y, and Z, but we've still got some big problems over here. And these big problems need to get fixed because they're unsustainable. Debt is unsustainable at the rate we're going about it. Housing mess is unsustainable the way we're going about it. The job market for kids entering the job market, right? Like your early entrant job market is not a healthy pool right now at all either. So there are some things that we're going to worry about. So, okay, you look at it this way. You're like, okay, cool. Fed cuts rates, right? That's great. That makes money less expensive. You could take more risk. We all get that, right? Businesses can expand. But if we don't get a change in politics, and what I mean by a change in politics, a change in some of the way we do business with other countries, the way we do business with ourselves, the way we manage our own country's debt, we're going to be running like off a cliff here really soon, and I think we have to be very careful about that. I think we have to be very careful, because if debt keeps going the way it's going, you're going to have a messy problem with that. Housing goes the same way. It's going to be messy as hell. Jerome Powell, he didn't want to talk politics at all, and I don't blame him for that, right? I have no hard problems with Jerome for that. But I think what we have to start thinking about here is there are some problems that we need to address. There are some things that we can't just keep ignoring. We have to face these things. And she is my pick for hottest in the room, so I'm just throwing it out there. Y'all can disagree with me as much as you want. I think she is the pick. But as you can see on that finger right there, homegirl has got so much ice she could freeze New York. Powell was cautious. Powell was very stringent in terms of, hey, look, we're going to let the data tell us what to do. When Powell was asked, hey, could you foresee a reason to raise rates sometime in 2025? He's like, look, we don't go that far out. But also, guess what? He's basically saying if the data doesn't look good, inflation creeps up, we've got problems. We're going to need to take a pause. We're going to need to raise rates. Michael Gray says it's a Trump pump and dump, let's go. Yeah, I kind of get that vibe too, where it's like we're all like, okay, we're going to play who can catch a falling knife. Is it fourth quarter this year, first quarter next year? And then we're going to go through some pain. And then after we go through some pain, the economy's going to turn around because we'll be able to see those rate cuts take effect. But right now it's going to take some time. It's going to take some time for those rate cuts to come on down and affect people. One of the quickest ways that you see the consumer get affected by rate cuts is with auto loans. So the faster these cuts come down, the faster you're going to see the auto markets heal. The used car market, new car markets have been an absolute freaking disaster. So we have some problems here. We have kids, young adults that are struggling right now to make it on their own. You've got kids with all the debt from college, which, hey, it's okay to take debt for college as long as you can land a job afterwards that can pay off that debt. So for those kids that aren't getting the help with that soft job market, there are some problems. Can we fix these problems? Yeah. Part of the way we fix them, we talk about rate cuts. The other way we fix them is we got to start getting some things done that are budget friendly, where we're not wasting money, where we're using our money wisely, where we're spending our money on things that we know are going to have an effect. Patrick Dalton says he bit his lip. He didn't like the question, stagflation is in his plan. Yeah, he did. He had a problem with that stagflation question. And in fact, like, what did he say? Our plan is to not have that happen. Okay, I guess, man. I guess. Pascarable says, just remember, we don't plan for it to happen, so it's not allowed to happen. Yeah, I think that's what we do. I mean, it's a very interesting time. I'm going to be curious to see how fast the new session of Congress tries to make things work. It always takes time to filter down to people. It's not something that's going to be fixed right away. Rates coming down are a good start, but that's only part of the equation. Well, what does it matter if rates come down if the homes themselves aren't affordable? Right? What does it matter if rates come down if car dealers are still only selling $90,000, $100,000 F-150 trucks? Right? I mean, rates aren't going to help that. JobWorks says, hey, Klaus, hope all is well. Yes, all is going very well. Von Argyle's got a good one. It says, my plan is not to have a fatal car crash on the way home. I know. That's the whole weird thing was he's like, our plan is for that not to happen. Dude, like he said that. I mean, I don't know. I don't know. The market right now is still going to be optimistic. We're going to be riding a Trump high for a bit. Pay attention to ETH, everyone. I want to highlight this right now, that when we start looking at ETH is up some big numbers here. Up 7% in the last 24 hours. We look at the rotations like this. Bitcoin is in one camp. ETH is somewhere over here in another. And then you got a lot of alts. So are we rotating Bitcoin move to the ETH move to the alt move? Is ETH signaling it to us now that there's going to be an altcoin move going on? In terms of bubbles popping and all that, I think we've got to be cautious, because rates, although coming down, are a good thing. They don't fix all of it. That's the one thing. They don't fix all of it. So don't think this is a magic pill. XRP talk real quick here. What happened was this: we pumped real late into early morning. We started making a little pump Ola action. Got pushed back at 57 cents in change, but we're coming back on the way up right now. Let's switch it on over to the 15-minute candlestick so we can see the action right here. And there's that move. Clear as day. We made that move, and then we've kind of pulled back since. We got some support north of 54 cents, and then boom, back up to 55.6. By the way, the high on that candlestick for the resistance earlier today was 57.85. 57.85. Some meme action here. You got some pay starting to move. You've got some other stuff starting to move. Some other small action. Some small cap movement as well. I like tracking the Russell 2000. The Russell 2000 moves. There you go. I mean, Pascarabos' brother Cardano making 10% on a day has to be some kind of sick joke. Yeah, I look, just throwing it out there, all right? Cardano, I'm just not a fan. Charles, I don't think he's doing it any good. Yeah, BTC is looking healthy for the day as well. The Fed came in and she's looking healthy as well. Can I get an amen on that one? 25 basis point cut is what we got today from the Fed. I think you're gonna see this election optimism go for quite some time. The question is though, is what happens afterwards? I mean, you know, is it like a vacuum then, where it is a pump and dump and we get a very substantial pullback? I'm just curious about that. Very curious, because you are seeing the optimism in the market. You are starting to see more alts starting to move. Solana looks like it's going to break 200 here pretty soon. BNB's already at that 600 mark. Sweet, darn close to all-time highs right there. No love for Caspa though. Look at that. No love for Caspa. Caspa right now sitting at 11.7 cents. XLM breaching a dime at 10.1. Optimism not seeing as much love either at $1.60. So yeah, there are some things moving, but we're going to need more action than that. What we're going to do is this. We're going to take the stream to 3:30 today Eastern time. So get your questions and comments in, because I want to make sure I get a video recapping what happened with Jerome Powell and the Fed. But if you didn't see, it was a 25 basis point cut. We go on over to the December contract and look at this. December contract right now is having another cut in place on top of the one we just had. When Solana ETF 2025. 2025, I'm thinking Solana ETF. Sol right now up 4.8% last 24 hours. ETH is up 8% last 24. Fed dropped it a quarter for all of us. We're kind of starting to touch a little bit less and less of BTC season and go to altcoin season, which is cool to see. XRP is moving its way back on up. Solana, look at that. Solana's making the move as well. Solana 186, 185 earlier today, now at 197. Print more money, print more money. Pascarable says, thank you for the stream, Klaus and chat. Gonna hit the gym. Good luck, everyone. Job Work says, I would think an XRP would be much higher. Agreed with you on that sentiment. I think a lot of people were thinking XRP would have made the move. But here's the thing. XRP did make the move. It just got rejected at 57.85. Will XRP be able to make that move later today? We're seeing the uptrend continue since about 2:45. XRP making it back on the way up. Election has been decided for the Senate. Also with the presidency, both will go to Republican control. We're still waiting for results from the House. Right now, you've got 210 seats for the House and the Republicans and 197 for the Democrats. Dylan Kirk says, separate your hate of Charles Hoskinson from the Cardano project. That's a good point to make. But also, if that person just isn't helping them, they then need to get out of the way too. Right? I think we have to be realistic here. If a CEO, if a head of a company, if a face, right, a main face person is doing a bad job, then they got to go too, right? Just throwing it out there. Jobwork says, I wish I invested in Sol and Doge instead of XRP. Playing the laggard effect with XRP as BNB is touching 600. We've got 5 minutes until the stream ends, so get your questions, comments in now. Crypto market overall looking a bit hotter. We're seeing some things move here. Most of it, Tron's TRX not doing that at all, which, hey, I have no problem with that. XRP's making the move. Sol is making the move. BTC as well making a move. No, Ripple is not going to hire Gare Bear. Gary's going to go private. Gary is going to go private and make a ton of money. I'm telling you. I guarantee you he's already doing interviews for his next job. Guarantee it. Gary, his knowledge base and his connections are worth the price. Think about it. Half the people are happy with the way the election went. The other half aren't, right? So that means Gary's got a lot of connections and the one half that people don't like, which for those people, it's what they do like, so he's going to be a hot commodity. Chris says XRP's time will come. When it moves, it will rocket straight to the F on up. Chris B looking for some good action from XRP, which has been a laggard in the market. We've got to be honest here. It's been a laggard in the market, but rates coming down will float all ships, including the laggards. And I think that's where you're going to see a lot more action. As these rate cuts start taking effect, you're going to see more of that hit the consumer, which is us, more of it hit retail, which would be a good thing. LD Robert says, would you ditch HBAR for SWE or for Sol? The thing with Sol's got a lot of like Beam. Sol's got a lot of social engagement. SWE doesn't have the same, but SWE has a lot more fundamental action. SWE is also a lot earlier in the game in terms of integrations, partnerships, and so forth. Sol's a later player in the game, but we've also seen the shenanigans with Sol, right? Remember that when FTX, right? We were all worried about FTX and Sol. So both got their goods and bads, but the big question you have to ask yourself is, you're ditching HBAR, how many other people are going to be ditching HBAR or have already ditched HBAR? Because the performance of HBAR has been just piss poor, everyone. And honestly, the market's all about pumps and dumps, isn't it? And so would I be surprised if ETH touches some big numbers and come back down? Not at all. Would I be surprised if BTC touches some big numbers and comes back? Not at all. Dylan Kirk just says, just saying, Cardano and Bitcoin OS integration is not such a bad thing. No, it's not. It's not such a bad thing at all. It's just, I think like the leaders of these projects, the face people of these projects should be doing good for them. And Charles brings a lot of unwanted attention to himself. He's ripped on other crypto communities before. He hasn't been a good face to it. And so my whole point is this, is you want the face of these companies to be like positive role models for those companies, positive portrayals for those companies. And Charles just doesn't have that. He rubs a lot of people wrong. He rubs a lot of people wrong. Jobwork says, I think XRP has a lot of resistance. Whenever it pumps, people want to dump since XRP has been disappointing. Yeah, there's a lot of times where when XRP starts pumping, I get the emails and the messages for people telling me, bro, I'm out of here. I can't do it. I can't wait any longer. And that's the whole idea of the laggard effect. All right, we're going to be shutting down the stream here in about a minute. What I'm going to do, though, is I'm going to leave chat up. Dylan, bring it up all you want, man. Bring it. I love when you guys and gals bring that kind of stuff up. Feel free to share stuff, Dylan. No harm at all, man. Yeah, last minute for the stream. What I'm going to do then is I'm going to play some music, leave the heat map on, leave the chat up so y'all can hang out, and make sure that you say goodbye to each other because, of course, hold on a second. You know what we're going to do. We got to do the best one. I will catch you cool cats later. Choo-choo, bitches.
Baby, you give me ice and fire. You're giving me wind and rain. You're some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry. Oh, well, I don't wanna jinx it, baby. And twist myself at the spine. Don't wanna overthink it, baby. It's just twist your body and mine. Baby, you give me ice and fire. You're giving me wind and rain. You're some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry. Oh, but I don't wanna jinx it, baby. Let's not get ahead of my time. Oh, but I don't wanna miss you, baby. So I stand up and speak my mind. Oh. Baby, you give me ice and fire. You're chilling wind and rain. You're some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here